Okay, welcome to the April 14th edition of the Fats, Fuels, and Oils webinar. This week, we're going to talk a very little bit about the WASDE report that came out today. There wasn't really that much to talk about, actually. And then we'll talk about what's going on with South American crush and exports and the situation down there and how that can impact this idea that we talked about a little bit last week. A little bit more if you were able to join the stable webinar. If you weren't able to join the stable webinar and you'd like to see it, let me know and they can send you, or I can send you, I think, a link to it, or at the very least the presentation. So USDA, let's just do this. USDA released their April WASDE report this morning, and they basically didn't make any real changes to their US balance sheets. So the only change they made was a modest change in their soybean meal production forecast, which was a 50,000 ton decrease, and that brought their estimate of production into line, or their estimate of soybean meal yield into line with ours. I think there's still a bit of a discrepancy on production just because we're a little bit higher than they are on crush. Literally the only other change that they made to the soybean complex was a 2-cent decrease in their forecast for soybean oil prices, for average farm prices for US soybean oil, given what we've seen in the markets lately, which I would kind of argue is sort of split between what's going on in the futures market and what's going on in the cash market. Of course, there's always a difference, but what we've seen, especially recently in the cash market, is basis levels have been a little bit steadier than we've seen in the futures market. Again, that's always going to be the case, but given sort of the weakness that we've seen in the futures market, basis levels are kind of holding in there. I still think that suggests that second half of the year, prices could rally, but a lot of that will depend on everything else that we're going to talk about today, which is what's going on in South America, and then how that impacts soybean supplies available for crushing in the US during the summer. The other thing, the last thing that I want to talk about, at least is with regards to the US, and I forgot to bring this up last week, was that the EIA the EIA started to separate out soybean oil used in biodiesel production and renewable diesel production in their last report. So starting with the January 2023 data, but they went back to 2022 and provided estimates for soybean oil used in renewable diesel and biodiesel production for 2022. And surprisingly, the soybean oil used in biodiesel production was substantially higher than we had estimated, which conversely means that soybean oil used in renewable diesel production was substantially lower than we had estimated for 2022. So you can see 1.58 billion pounds was the total difference for all of 2022, and I'm very happy that EIA has started to do this. I think that it'll help provide a lot more clarity, not only for the soybean oil market, but since renewable diesel demand will be clearer based on having that one piece of the puzzle. It would be nice if they did it for all the feedstocks, but renewable diesel demand for soybean oil will be much clearer, and then with that one piece of the puzzle, it's a little bit easier to figure out the rest of the puzzle as well. The other changes that USDA made to their projections for South America, and excuse me for looking down here, they raised their forecast for Brazilian soybean production by 1 million tons. That's not a big surprise. They went from 153 to 154. They took 500,000 tons of that increase and allocated it to crush, but they left their exports alone at 92.7. we're a little bit above that on Brazilian exports, but the key to Brazilian exports is really going to be Chinese demand, which we'll talk a little bit about as we get a little further into the weekly presentation. For Argentina, they cut production by 6 million tons from 33 to 27. Again, not a surprise. I think most people think that the crop is somewhere probably between 25 and 27. That meant that they reduced their crush by 3.25 million tons from 35 and a quarter to 32. They left their exports alone at 3.4. Most of Argentina's exports for the marketing year, at least the way that we look at it, already occurred. They were old crop exports. And so basically what they're saying is going forward, Argentina is just not going to export a lot of soybeans, which I don't think anybody disagrees with. I think one of the more interesting and one of the more important numbers that USDA did for Argentina was their stocks number, which dropped from 19.8 to 18.1. So despite a 6 million ton decrease in production, and fair enough, half of that was a little bit more than half of that was offset with a decrease in crush, they didn't really draw stocks down. Now, yesterday was the first day of the third edition of the soy dollar program, and apparently there were some technical issues, and so there wasn't a lot of selling from the farmers that was done yesterday. In addition, it looked like probably the prices that farmers were expecting were a little bit different than the prices offered under the program. I don't know if that difference was due to the technical issues, or whether they're just a little bit apart on expectations. I think that it's going to be difficult, and I think it's always difficult to get Argentine farmers to sell soybeans. The soy export program undoubtedly helps, but each one has had a lower marginal response, and I think that that this one will probably be lower than the last one. Ultimately, we'll see, but Argentine farmers really, and you just can't say this enough, Argentine farmers use soybeans as a hedge against economic uncertainty and inflation in the country, which is really, really, really high. And so they are really less concerned about price than they are about the economic outlook for the country, especially inflation. And so it would probably be, if it was possible, more effective for the Argentine government to deal with inflation. Again, that sounds like, oh, if they just did that, I understand how difficult it is. But that would probably trigger a lot more sales than the third edition of the soy dollar program will. Nevertheless, the relatively small decrease in USDA's outlook for stocks is generally in line with the way that we think about it. And I think that will have an impact on crush going forward. And again, we'll get into that in a little bit more detail. Finally, for China, the two big numbers, they took their crush down from 92 to 91, but they left their imports alone at 96 million tons. China is starting to deal with another outbreak of African swine flu or African swine fever, ASF. And so, as we'll talk about in a little bit, that's having an impact on crush margins and Chinese import demand. And I took my crush down pretty substantially for China. It will be interesting to see where ultimately that shakes out and how much impact ASF has on China this time. Last time, the Chinese government, which had wanted to modernize its hog industry, kind of allowed a lot of the smaller farmers to kind of go out of business, or I'm sure that they made that transition, incentivized them to make that transition so that they could modernize their hog industry. And they'd made a lot of progress in doing that. and that will help, I'm sure, limit the impact of ASF this time around. It said it's a really contagious disease and really hard to control and really deadly for small pigs, and so there definitely will be some impact. If my crush expectation is right, then I would expect that Chinese imports will probably be substantially lower than USDA expects, and maybe even lower than I expect. I think I'm in the low 90s, somewhere in there. And that'll have implications for South America and ultimately the US, and really ultimately whether there are enough soybeans to crush in the US to produce soybean oil to meet the demand from biomass-based diesel production, which is what most people on this call care most about. Okay, with all of that said, so this is what Argentine crush margins have done recently. And if you look down in the lower left-hand corner there, you'll see the average for the first couple of days of April, which is negative 23 cents. This is not surprising in Argentina, given the fact that their crop is really short, and so soybean prices are high relative to what they can sell soybean oil for and soybean meal for. Argentina relies a lot on the export markets, and with the world export market at the very least being better supplied relative to demand than it has been the last couple of years, that's probably going to keep pressure on margins. However, I think the other side of that is that you'd kind of seen world meal demand tick down a little bit, and so while U.S. meal prices remain really high relative to their historic average, they kind of have come down a little bit too, and that's really sort of taking crush margins down from extraordinarily high levels to just basically high levels over the past several weeks, really. And that's not a phenomenon that is unique to the US. So Argentine crush in April, given the supply challenges they face and the crush margins, probably going to come in a little bit lower than expectations. Now, for March, you can see that Argentine crush has slid from November downward. November was sort of the first month that it had kind of ticked back above the last couple of years and the 5-year average, but then it just kind of fell off a cliff after that. We've got it going back up in March, primarily because Argentine soybean imports were a record 1.39, or we estimate that they're going to be a record 1.39 million tons in March, and I think a lot of that will go to support crush. And what happens is farmers in Paraguay sell their soybeans to Argentine crushers. They crush them and then they export the products. And typically that happens at some volume. This year, I think it's obvious it's going to happen at a higher volume, although Paraguay had its own problems with its crop, and so I don't know that kind of Paraguay is going to ride in and save the day for Argentine crush. And it wouldn't surprise me if Argentine crush volumes, or expectations for Argentine crush volumes for 22, 23, and 23, 24 kind of work their way lower through the year. USDA's number at 32 is really low relative to the historical series, and I think it's probably pretty close to kind of where we are. But it could continue to move lower, just depending on, one, the success of the soy dollar program, and then two, the volume of imports that they get from Paraguay. Brazil crush margins are doing better than Argentina, but still have fallen off pretty sharply over the last couple of months. Again, just like the U.S. And most of the Western Hemisphere crushers. In Brazil, it's a little bit more surprising, I think, given the size of the crop and what we've seen happen with Brazilian prices. And so the cost side of the crush margin calculation for Brazil has come down, but the value side of the products has just come down more. Now, Brazil will, even though the world is probably better supplied with soybean oil than it has been the last couple of years, Brazil is going to need to step in to provide some exports that Argentina doesn't. And I think also probably some soybean meal exports. If you kind of look at in soybean meal is important for crush because remember, everybody crushes for meal and then tries to figure out what to do with the soybean oil. And so it looks like if you kind of add up the loss of Argentine crush and what we've seen in US crush so far, it looks like for 22-23, world soybean meal supplies are probably off by somewhere between 3 and 5 million tons. Now, if the demand is not as strong as it has been in the last couple of years, which I would argue is kind of what we're seeing right now, then that may all work out just perfectly, and that may kind of balance all of that. But if not, then the expectation that Brazilian crushers are going to crush a whole bunch of soybeans and replace everything that is lost from Argentina may not happen. And that's particularly true if margins kind of continue to slide. Now, part of why margins are sliding is it's harvest, and so prices tend to move lower at harvest. Brazil also has a record crop, and expectations are that Brazilian crush is going to be record volumes this year. So kind of all of those expectations are playing into what's going on in Brazil right now. But the one question I think that is important is whether how much of the new crop will Brazil export and how much will it crush? They have enough to do both pretty easily. Again, if USDA is kind of saying that they're going to export 92 million tons. They grew 153 million ton crop. That leaves 61 million tons to export. And I don't think that they are going to need to export that much, particularly not if Chinese import demand isn't as strong as expected. If Chinese import demand is not at 90 million tons, then it becomes really easy. But we are going to be in the same sort of situation we've been in Canada, where in Canada I kind of have said, changes to the crop or changes to supply will get allocated more to exports than it will to crush. In Brazil, it's a little bit the opposite, where I think probably changes to the crop size will get allocated to exports first and then to crush. Now, again, I don't expect that there will be big changes in the crop size going forward. We should have a pretty good idea of the size of the Brazilian crop right now. And because the crop is so big, there is enough to do as much of both as they probably will do. So I don't anticipate that will become something that we really have to think about or talk about. But it is something just to kind of highlight and keep in mind, just in case. You never know what happens. So this is our forecast for Brazilian crush. We're at 54 million tons. You can see it's just above where we've been the last couple of years and the 5-year average. We've got Brazilian crush through January. So it could be that, given what we've seen in Brazilian crush margins since then, really, that my expectations for crush volumes in February, March, and April are maybe a little bit optimistic, and crush may come in a little bit below those levels. But I would still expect that probably by the time we get to the end of the year that they'll be pretty close to that number, just based on what the trade matrices for soybean oil and soybean meal kind of suggest that the world needs in terms of soybean oil and soybean meal out of Brazil. So this just kind of shows what happens when you grow a record crop. You can see the blue line there is Brazilian prices in export markets, and there are two things that I want to highlight here. One is the sharp drop in Brazilian soybean prices, and then two, what that means for Brazilian exports and for U.S. exports. I have a little table that looks at the relative price of soybeans from Brazil going to Europe, and then from the U.S. Gulf going to Europe, and the PNW, well, not PNW going to Europe, Argentina going to Europe, and then all of the same, except I also have the PNW going to Asia. And if you look at the difference between if you look at the difference between soybeans from Brazil and soybeans from the U.S. Gulf, right now there's $112 per ton difference to Europe and $102 per ton difference to Asia. And so that suggests that U.S. soybean export sales, at the very least, are going to decelerate rapidly in the coming weeks. And I think we saw that a little bit in last week's data, where sales were below expectations and kind of below where we have seen what we had seen sort of the prior couple of weeks, or for the last 6 or 7 weeks. I think the export season in Brazil was delayed a little bit by not only the logistical challenges of getting a huge crop out of a huge country, but also there were some weather issues at the ports early in their export window, and I think that extended the U.S. season a little bit. But now I think that's over, and so I think going forward it's going to be almost trying to guess how low U.S. soybean exports can be this summer. We've already sort of taken them down as low as we can during the summer months, but we still have April and May not high relative to history, but maybe a little bit higher than ultimately they will be, especially given what these prices suggest. And this just kind of shows Brazilian monthly exports. You can see if you look at January's total, that it was down pretty substantially from the prior year. And I think a lot of that had to do with, again, some of the delays that I talked about. They had a better volume go out in February, but it still was below last year. Now, expectations are that March is going to exceed where we were last year and where we have been. And then I've got April a little bit below where it has been, where the record levels are from 21, 22, and 2021. It could be that April is significantly higher and May is significantly higher than my expectations. If that's the case, I don't know that I will raise my forecast a lot. I'm already 5 million tons above where USDA is, and particularly with these concerns about China. So probably what will happen is, to the extent that the next several months come in above my expectations, I probably will just trim their summer, late summer, early fall, kind of around the US harvest export volumes. Keep that number the same. That number ultimately may prove to be a little bit too high, and so I may have to come down from 97 a little bit, but we will kind of see, especially how the next couple of months go. Okay, so on to China and what has happened there. You can see Chinese crush margins really peaked a little bit before where Western Hemisphere margins peaked. So there was a peak really back in November, and then they haven't really kind of ever bounced back from that in any substantial way. And in fact, kind of dropped pretty sharply in over the last 2 months or so. There were a fair number of data points in this chart that were negative over the last couple of months. Again, part of this is or probably the main driver of the weakness in Chinese margins is the ASF and the impact that that's having on Chinese meal demand, and that will have a significant impact on their import demand. You can see I've always included sort of locally produced against import margins. The locally produced is very rarely competitive, so it's not really a great comparison. But you can see that locally produced really doesn't factor into this, and so to the extent that ASF will have an impact on Chinese soybean meal demand and Chinese crush margins, then it will weigh more on import volumes than it will on the volume that they source locally, which is relatively small compared to the volume of soybeans that they import. All right, if we put all of this together, what is the outlook for crush kind of going forward over the next, really the remaining of the 22-23 marketing year based on the US SEP August marketing year? And you can see what happened in January when crush really started to, or when crush margins really started to decline in China, and sort of were getting close to their peak in the US and Brazil, and where Argentina was really starting to run out of soybeans. Argentina in particular, I had to shrink the font down to get it into the little box for their crush. But we do expect volumes to come back and be close to or just slightly above or just slightly below where the volumes that we saw last year. But given, again, the things that we talked about, the fact that the world soybean oil supply demand is probably a little bit better balanced than we've seen over the last couple of years, the concerns about ASF and its impact on Chinese demand, it may be that my expectations for crush volumes are a little optimistic. And what all that really means is that at the end of March, we got a stocks report from USDA that basically showed that stocks had fallen kind of year over year, and at the end of Q2 kind of set Q3 up to feature a big drawdown and leave stocks relatively tight going into the final quarter of the marketing year, the third quarter of the calendar year. If Brazilian crush doesn't need to be as high as it is, and if Argentine crush is a little bit higher than I expect, or even if it's a little bit lower, it looks like there probably is going to be enough product production to meet the world demand. Now, except for soybean meal. And we don't really know about soybean meal, I think, going forward. China doesn't really import a lot of soybean meal. Mostly they import soybeans and crush them. So the ASF thing doesn't really have an impact on world soybean meal demand. But world soybean meal demand has kind of decelerated a little bit. And I think that you could almost say that if world the world economy is going to slow in the coming months or over the summer, that may have an impact on meal demand, because it will reduce meat consumption in some of the importing countries. Typically, the importing countries are countries that are developing countries, and they have a livestock industry, but they don't have a crushing infrastructure. Or they're countries, Vietnam, I think, is kind of a classic example. They import a fair amount of soybean meal. A lot of that actually is to feed livestock that ultimately then gets exported to China. And so I think that that's the one area probably where ASF can have an impact. The Vietnamese hog industry produces a lot of piglets that end up in China. And so if China has problems with ASF in their country, then Vietnam's hog industry may import more soybean meal. That may keep crush demand, I guess, for Brazil and Argentina a little bit stronger than expected, but it just doesn't quite feel like that. I haven't really been able to put my finger on exactly why we're seeing the slowdown in meal demand, but that's kind of my best guess at this point. And I think it's something that will have a significant impact, not only on Brazilian crush, but then also on sort of a knock-on effect on the US. And it kind of comes through this way. If the US ultimately needs to produce enough soybean oil to meet the demand for biofuel feedstocks, and that demand is more than the domestic meal demand would suggest. So if we just crush to meet the meal demand, we're not going to produce enough soybean oil to meet the demand from renewable diesel producers and biodiesel producers. Then what's going to happen is we're going to need to export that meal. And if meal prices in the world are weaker than expected, we've already kind of seen a slowdown in US meal domestic demand, just relative to the record levels that it has been at sort of over much of the past year. If we have a hard time, or if export prices for soybean meal are weak or get weaker, that just provides less incentive for US crushers to crush. Now, what that I think will mean potentially is that soybean oil prices will need to do that much more work to offset the decline in crush margins due to weak meal prices. So if that's the case, then soybean oil prices could be a little bit more bullish than I'm expecting. That all depends, of course, on whether we have enough soybeans to crush in the fourth quarter of the marketing year. Based on what we're seeing right now in the trends in Brazilian exports, Brazilian crush, Argentine crush, it looks like there probably is a better chance that we have enough soybeans to meet that demand than I would have thought a week ago or 2 weeks ago. That said, my carryout still is sub 200 million bushels in the US, and USDA's is as well. They didn't make any changes to their soybean balance sheet, and for the upcoming marketing year, for 22-23. And so no matter what, whether we crush an extra 5-10 million bushels of soybeans, or we crush 5-10 million bushels less of soybeans, it's not going to make such a substantial difference in soybean stocks, US soybean stocks, that there is now a surplus of soybeans that we're kind of trying to figure out what to do with. We're just going to be tight on soybeans in the US in the fourth quarter of the marketing year, sort of no matter what this year. And The decline in crush margins right now suggests that kind of things are getting back to normal. And that it may be that lasts through the end of the marketing year, but I suspect that as soybean supplies tighten up, that you probably are going to see oil put in a bottom, and maybe meal prices put in a bottom too, just kind of depending on what's going on with the export market and what the demand for biofuels implies about the need to produce meal. And then prices kind of rise into the U.S. harvest, and then depending on the size of the U.S. crop, then probably peak and fall. Now, the one thing that I would note is that if you look out a little bit further, so that's through the end of 22-23. If you look out a little bit further into 23-24, and let's just say that the U.S. produces an average crop, not necessarily record production this year, but just kind of about where we've been, enough to add maybe 50 million bushels, or maybe even a little bit more than that, to our ending stocks for 23-24. So you get 23-24 carry out around 250 million bushels, enough so that we're kind of comfortable next summer. Brazil probably will expand acreage again. The end of La Nina means that it's much more likely that Brazil produces a crop that is closer to its trendline yield than it has been, although this year was close to its trendline yield and weather was really supportive in most areas, although far southern Brazil looked a lot like Argentina. So there's another, I don't know, 5 million tons or so that you could have had this year. And then Argentina also produces a crop that is 50 million tons instead of 25 million tons. 23-24 looks like it could be really bearish for soybean prices, and by extension, soybean meal and ultimately soybean oil prices too. Right now, I'm just starting to kind of try and figure out where I think those prices are, and where my forecast will move to sort of reflect that. Because for soybean oil, in theory, we have this competition between growth in biofuel feedstock demand and potentially just the world kind of awash in soybeans. The decline in soybeans, which could fall back below $10 pretty easily, would drag soybean oil lower with it. Now, I don't think that means that soybean oil goes back to 30 cents, but the 23-24 average for soybean oil could be 50 cents or below. That's just a very rough guess, again, based on the idea that we have strong demand out of biofuel and we have really weak soybean prices. But as we get a little bit closer to the next marketing year, and as I sort of fill in, or I've got all this stuff filled in, as I go through the next marketing year in detail through the trade matrices and all of the countries, all of that kind of stuff, my forecast will start to reflect that. And I think that what you're going to see is that pretty much for the soybean complex, you're probably going to see prices across the board kind of move lower for 23-24, unless we have a problem with this year's crop. We've got to get through growing this year's crop in the U.S., both soybeans and canola. The dryness in the prairies and flooding in the Red River Valley mean that planting is probably going to be delayed in some areas up there. And so there probably will be some impact on canola production. It just is a kind of a question of how much that's going to be. But outside of that, if we grow just kind of a trendline crop this year in the US, and then we get trendline crops in Brazil and Argentina next year, I think that soybean prices could head substantially lower in 23-24, and that will again have an impact on soybean oil. All right, with that, I haven't updated the data on the website yet. I'm going to do that. I'm going to try and get everything published tonight. I'm not 100% sure I'll get everything published tonight, but it will be tomorrow afternoon at the very latest that I get everything published with stories and updated data from USDA's report and updated forecasts. All right, with that, thanks everybody for joining. One final note, not next week, but the following week, I won't be here on Tuesday, and so we won't have a webinar. I will publish articles and get everything done before I take off. I'm going to a SAF conference in Virginia, and so we won't have the webinar on the 25th. I'll remind everybody again next week, and of course you won't get an email that week that with the link, but just so you're aware, on April 25th we will not have a webinar. All right, thanks everybody. I hope everybody has a great week. Bye-bye.